welcome to the CNBC TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, it's turning out to be a down day for the markets. We have the Nifty, which is down around 174 odd points. And we have a bit of a sell-off which has taken place again for the sensex, which is down over 600 odd points. Well, we do have a lot of queries lined up. So we have Astha Jain, research analyst at Hem Securities, and Rajat Bose from rajatkbose.com to answer all of your stock queries. Well, Rajat, let's get to you before we get to all of the queries. It's turning out to be a weak day for the markets. We did see a little bit of an intraday recovery, but that seems to be a little tepid at this point in time. Overall, how would you approach today, and especially what you're seeing on the advanced decline ratio?
Well, advanced decline ratio is actually pretty somewhat of a concern because it's not giving any happy signal. But then, regarding the movement of the Nifty or the Bank Nifty, what I would like to say here is this: that is, unless you fall below 2200, it is not that weak, and unless you take out say 22,500 levels, you are not gaining strength either. So this is actually a very bad day for traders because there is not much movement. People like me advising traders, I would say that just step away from the market for the time being unless a clear direction is given. I would say that at lower levels, I would still buy the market because this is a temporary phenomenon. Since the 20-day moving average as well as the 50-day moving average, both are still climbing up, and there are chances that 9-day will be reclaimed and the party will continue. Bank Nifty, unless it falls below, say, 47,700, don't need to worry much. Regarding CNX mid-cap, let it fall below 49,000. Only then you will see some kind of a problematic scenario. Otherwise, this is a course correction. See, even a 600-point kind of fall in the Bank Nifty, Nifty Junior and CNX, if you look at their values, current values, it is just above, say, maybe 1%. It's nothing much. So it's a pause.
Okay. All right. So 47,700 is a key level for the Bank Nifty. So until it falls or tests those levels, one shouldn't be worried. That's the word coming in on the technicals of the market. So let's get in a couple of queries now. We have Harbans Singh Gill, who writes to us from Chandigarh, holds 20 shares of IDFC First Bank, which is bought at around 80 odd rupees. And he's a long-term investor, wants to know what to do, whether he should book his profits or he should probably stay invested. So currently he's just sitting on a marginal profit at this point in time. What do you recommend, Astha? Do you think there's more to go for this one?
Yes, hi. Good afternoon to all of you. Yes, we think that from here also IDFC First Bank will show a strong rally, and our target for the same is around 92 to 98. So we can say in a broader terms around rupees 100, but that too in the long term. So talking about this counter, we think this counter will show a strong deposit, growth, especially if I talk about the CAGR, then we are expecting the deposits to grow at a CAGR of more than 20% from the years ahead. Right now from 23 to 25, this is what we are expecting. Apart from that, we are also thinking that now the bank will be able to pay their bonds, so that will be also reflecting in the strong financial performance which we are expecting from this bank. So all in all, we are expecting a strong performance on the back of repayment of some bonds, as well as strong growth in the deposits and break even on their credit card platform. So all these will contribute in this strong financial performance, and that's why we are positive, maintaining hold on this counter with the price target of 92 to 98 at the initial levels.
Okay. All right. Well, on the technicals, what would you recommend, Rajat?
Yeah, I would say that IDFC First Bank on 10th of this month actually took out this intermediate downtrend line. The downtrend line is coming from the top recorded by, all-time top recorded by IDFC First. And after that, these two sessions, the two sessions, including today's, it is testing that downtrend line. But again, the moving averages here are showing that they are giving good support, and chances are that it will cross the recent high around say 85 or so. Once that level is taken out, I would concur with Astha that 96 to 98 would be the level to watch out for, because it has completed its correction and it is going to go up. Any dip should be used to buy. Of course, not for short-term traders. Intermediate to long-term players should be buying on any dip.
Okay. All right. Fair enough. Let's get in another question now. This one is on a Nifty major, ITC. Girish Raj writes to us from New Delhi. He holds 10 shares of ITC, which is bought at around 272. Wants to know what he should do, whether he should hold or sell or buy more shares of ITC. Well, sitting on definitely a good profit on this one, good price, which it was bought at. So Rajat, let's go to you first. What would you recommend on ITC? Do you think that this one would be a hold at these levels? 52-week high, or the highest price it's seen in the past couple of weeks is 500 odd.
Well, first of all, I would like to compliment the investor for buying ITC at a good level. And I would suggest that he should continue to hold on because it is showing signs of moving up. It needs to take out 440. Once it takes out that, then there would be a good upswing. And once it crosses 450, you can expect further higher levels. Eventually, you will see that 499.70, that is the all-time high, if I'm not mistaken, that would also be taken out. So ITC, two big stocks that I'm bullish at the moment is, one is ITC and the other is HDFC Bank. Of course, ITC will give much more percentile returns, but HDFC Bank will also give some good returns.
Okay, what would your target be on ITC, if you could just reiterate that?
See, initially the targets are 450 to about 456, and after that 470, and then the all-time high levels 495 to 500 should be your target.
Okay, all right, fair enough. And what about the fundamentals, Astha?
On fundamental front, even I am very much positive on this counter, giving buying as well as pull rating on this counter with a price target of 480 at the initial level. So talking about this counter, they are doing good business on the cigarette segment basically, and it is showing strong growth in the volumes, first of all. Secondly, their other businesses, that is apart from cigarettes businesses, is also doing very strongly because the contribution from the other businesses has significantly increased. It was only 17% in FY13 and now it has increased to 27%. So the contribution from the other segment is also looking very strong, and going ahead they will be the growth drivers for the company. This is what we believe. And company is also looking for the capex of around 35,000 crore to 40,000 crore. So I think all these points are signaling towards the strong growth in the stock prices as well, and that is why we are positive on this counter, giving buying as well as a hold recommendation on this counter with the possible price target of 480 at the initial levels.
Okay, all right. That's on ITC. Let's get in another query now. Suraj Kumar writes to us from Mumbai, who holds 20 shares of Bank of Baroda, which he's bought at 40 rupees. So great price there. He wants to buy more shares and asks if he should wait for the dip. Well, I don't remember the last time we saw 40 rupees on Bank of Baroda. But in any case, what would you recommend on this one, Astha? Would you recommend buying at these levels, or would you recommend probably waiting for a dip?
So I will recommend to probably wait for the dip, because now results are around the corner. That why not to wait for the results? Although if someone has this stock in the portfolio, they can continue with the holding because our price targets are somewhere at around 285 to 300. So talking about this counter, because we are positive on this counter because management has guided for the strong NIMs of around 3.15%. So I think the strong NIMs is the case for us to be positive on this counter, and they are able to manage their credit cost also very well. So I think this bank will show strong financial performance in the results of Q4 of FY24, and that is why we are advising hold on this counter. But for the new or a fresh buying, let's wait for some more time and then make an entry into the counter. Meanwhile, price targets are around 285 to 300.
Okay, all right, 285 to 300. And what about you, Rajat? How would you be placed on this stock?
I would say that at current prices, I would not recommend a buy. Suppose if it were to fall below, say, 250 to about 243 support area, then it can go down to 225. And between 225 and, say, 210, that would be a good buying opportunity with a stop loss below, say, 175. And current position should be held with a stop loss below 243.
Okay, all right. Well, Rahul Kapoor now writes to us from Mumbai, who has 30 shares of Coal India, which is bought at around 100 odd rupees. So we're getting great buy prices from our retail investors in today's session. He's saying he's making profits in his investment and wants to know the future prospects of it and whether he should probably take profits on this one. Rajat, what would you recommend? You know, there's some great investment calls that we've got through our queries today, very good prices, and people have more importantly held on to their investments for a longer term and now are sitting on good profits. But on this one in particular, what would you recommend?
See, regarding Coal India, or for that matter, any stock that any person is actually holding beyond the beyond 1 year time period, in that case, I would say that if you sell, you will actually have to give 10% as your long-term capital gains tax. And that means you have to buy again if there is an opportunity below that. In this case, let's say you are taking a 25 points kind of capital gains that you have to sacrifice for tax. I don't see a major fall in Coal India beyond that. So continue to hold on. Once it crosses 480 to about 500 supply zone, then there will be further upswing. And I would say that it's time at least we hold some minerals, resources kind of stocks that Coal India is. It would be better if one is holding it for longer term.
Okay, Astha, what about you? What's your recommendation on the fundamentals here?
So recommending hold as well as buy, both the recommendations are there for this counter with the price target of 485 to 490 at the initial level. Talking about this counter, as we all know, despite increased focus on the renewable as well as non-fossil fuel-based energy, the demand for energy is continuously rising, and we are expecting the demand for energy to remain at 1.3 to 1.5 billion tons, especially I'm talking about coal-based energy. So it will to remain at these elevated levels. So Coal India will be the major beneficiary. In fact, they have achieved a strong volume turnover also of around 774 metric ton, and they are planning it to increase to 1,000 metric ton by FY25, by FY26. So I think again a strong volume can be expected from this counter going ahead. And now the India is aiming as 24/7 power supply by FY25. So in that regard, coal-based energy will be really in a great focus, and Coal India is again a beneficiary of that. So I mean, clubbing all, I think it is poised for strong run going ahead also, and that is why we are giving recommendation of buy as well as hold with a price target of 485 to 490 at the initial levels.
Okay, all right. So that's on Coal India. Let's get in another query. I think this time it's from the Nifty space as well. Tejendra Singh writes to us from Pune. He holds 20 shares of ICICI Bank, which he's bought at around 700 odd rupees. So sitting on a profit there, wants to know what to do. What is the outlook of his investments in the near to long-term perspective? Well, I'm going to ask you about the near term. More importantly, the numbers will be out in around 2 odd weeks. That too, I think, on a weekend. Astha, what would you recommend on ICICI Bank? What's your expectation?
Expectations are like we are expecting this counter to show some sort of moderation in their NIMs, but I mean that is the case which we can see across the board, so it will be applicable to all the banks mostly. So maybe the contraction in NIM will be there, but we are expecting this bank to sustain their ROA of over 2% on the basis of the lower credit cost. In fact, what we have seen is that their LDR ratio is the lowest among the peer. So loan to deposit ratio is still the lowest among peer. So I think that is also creating a strong case of making this counter a buy on the dips. So we are recommending buy on dips as well as hold at present level, although our price target is around 1260 to 1270 at the initial levels.
Okay, and what about you, Rajat? Anything on ICICI Bank?
I wouldn't give a buy at the current levels, but then if anybody is holding it, one can put a stop loss below 1050 and continue to hold on. And if you get a price of around, say, 1060, I would say at that point of time, one may consider buying more.
Okay, all right. So that's on ICICI Bank. Well, we need to take a short break with the news that the markets are still under pressure. So 22,330 is where the Nifty is at. We have the mid-cap index, which is down over 680 odd points or thereabout. And the bank Nifty, which is also under pressure, so down around 1.3% for that particular counter. Well, in terms of specific stocks within the Nifty space, you can see that the advance decline ratio within that space itself is so weak. It's around 8 stocks advancing to the rest of the stocks, around 42 stocks, which are declining. So that's the kind of advanced decline that you have within the Nifty space. Well, we need to take a short break, but more queries on the other side. Stay tuned. Welcome back. Well, you're still tuned into your stocks. We still have with us Astha Jain as well as Rajat Bose to answer all of your stock queries this afternoon. Well, we have Rakesh Sharma, who writes to us from Chandigarh. He holds 20 shares of Sun TV, which he's bought at around 300. He wants to know what to do, whether he should stay invested or exit at current levels. He's bought it at a good price, Rajat. Astha, I know you don't have a fundamental view, but I'm probably going to ask you about any alternate stocks within the space. Rajat, Sun TV, what would you recommend on the technicals?
There had been a bounce 3 sessions back, but then for the last 2 sessions, including today's, it is coming down, and it is coming down to retest its 200-day exponential moving average, which is at 605. If it were to fall below that, if it were to fall below, say, 580, I think there is no business to be long in this stock. One should get out of it.
Okay. And what about you, Astha? I know you don't look at Sun, but anything out within the space, within the media space?
Maybe not strictly into that space, but yes, Saregama is looking good to us. In fact, Tips is also looking good to us. So both these counters are looking good to us. For Saregama, our price target is somewhere at around 420 at the initial level. And even for Tips Industries, we are positive because Tips Industry has a strong, library of songs. They have a strong content, and in fact, they have a plan to release movies also annually, 10 to 12. So these two counters are looking good to us, although not strictly into the same space, but yes, somewhere near to that. So Saregama and Tips Industries are looking good to us.
Okay, all right. Well, Tips was a choice which was given by Mark Mobius in one of his interviews as well within the mid caps. But let's get in another question now. We have Sunil Kumar, who writes to us from Pune with an investment. He says he wants to buy some RVNL shares and wants to know what other sectors he should look at and which stocks can he make in terms of investments, or which stocks should he look at in terms of investments. Astha, over to you on this.
So first of all, talking about RVNL, although Q3 performance was not strong, the revenues were on the decline mode. But what we like about this company is their order book, which was around 650 billion. And that is the 3 times of FY23 revenue. So a strong revenue visibility. In fact, the company is a target of the order inflow of 250 billion every year. So that is looking good to us. And we are expecting this counter to show, FY24 revenue at around 220 billion, and as well as profit after tax of around 1300 CR. So this counter is looking good to us only on the basis of strong financial performance in the future. and we are recommending hold on this counter with a price target of 300. Talking about other counters which are looking good to us is that mainly ICICI Bank and HDFC Bank in the banking space. So these counters, in fact, in automobile ancillary also we are liking CIE Automotive. So in fact, this is one of the counter that can be looked upon in the automobile ancillary space. So CIE Automotive is also looking strong to us. In the IT sector, we are not very much positive at this point of a time, but yes, in the capital goods space, again, we are positive on L&T, so that can also be looked upon. And L&T is giving a strong opportunity to buying because it is showing some sort of a correction. So wait till the results and then make entry into this counter.
Okay, all right. Well, we have George Joseph now, who writes to us from Mumbai. He holds 30 shares of IOC, Indian Oil Corporation, which he's bought at 50 odd rupees. He wants to know whether to hold or sell this particular counter. He's obviously sitting on a good profit on that one. Rajat, more to go for IOC?
Well, it is now in a corrective swing, and once it crosses 180, the corrective swing will be over. And if it were to fall below, say, 160, then things would be pretty dicey. And below 150, one should exit. That should be the stop loss. And currently, my suggestion is a hold with a stop loss below 150. And only when it gets past 180, one may consider buying more. Technically speaking, that is the pitch.
Okay, all right. Anjali Sharma now writes to us from Nasik. She wants to buy some shares of Tips Industries and asks whether she can buy at current levels. Well, since you mentioned Tips, I'm going to, toss this one over to you, Astha. What would you recommend?
Yes, because we have already discussed that counter. We are positive on this counter because they have a strong subscriber base of around 6.3 million. This is what we believe. And in fact, we are expecting their performance to be stronger and expecting the CAGR growth of more than 30% in their operating profit in coming years. So have a strong library of 30,000 songs, which I have already told you before. And in fact, they have a plan to release 10 to 12 movies every year. So all these things will really help the company in showing strong performance. And yes, we are positive on this counter, giving a price target of around 530 to 550 at the initial levels.
Okay, all right. So that's on Tips. Rajat, would you have a view on it?
Well, regarding Tips, I would say that right around the time when it clocked 350 and started moving up, volume started declining, and volume is still declining. So this is looking a bit top heavy, but unless it falls below 400, you don't need to worry much because it can still continue. But no fresh purchases would be recommended if you are looking at the stock technically.
Okay. All right. Well, Rajat, as well as Astha, on that note, we're going to have to let you go. But it's been a pleasure listening to all of your views on the queries that we've got. Well, that's all the time that we have on the show. We do leave the markets in a weak state because the Nifty is now down around 200 odd points. We have the mid-cap index, which is now sitting with a cut of almost 740 odd points as we speak. And the Bank Nifty too is down around 1.3%. Well, do remember to email us all of your queries. We'll address them with our experts. Stay tuned. Closing bell up next.